I would now like to introduce Joseph Finbow, Senior Client Manager at FiscalReps, to present on EU premium tax case files.
Good morning, everybody. Joe will do fine. Joseph is normally when I've been naughty. I'd like to spend a little bit of time just sort of looking at some trends in IPT and look at the work and projects that we at FiscalReps have been doing to help our clients in meeting the challenges that they're facing. So Mike has stolen my thunder a little bit, and hopefully the trends that I'm seeing agree with the boss. When I was putting these trends together, I was looking at the slot that I did last year at this sort of time, which was looking at the number of changes that were going through in IPT. I went back over that presentation and counted 20 different changes. This year, there's not been so many, but those changes have had an impact. There's been a number of rate rises, such as the Finnish rise from 23 to 24% and the Dutch rise from 9.7% to 21%. A number of proposed taxes, some of which have died a death, such as the Irish pyrite levy. Some have been enacted, such as the Danish and Hungarian IPTs. And some we still don't really know where we stand with, such as the Czech proposals. As I say, though, the pace of change has eased off a little. Maybe some of the more notable things that have happened this year are the introduction of a new tax on motor premiums in France. The Belgians have changed their filing deadline. And the Cypriot stamp duty has raised from €1.71 to €2. But there will be more. I'm sure of it. As Mike said, it's tough times still. Governments are looking for money. And IPT is a very easy way to raise revenue. It's a silent tax. It's one that's sort of thrown on the invoice at the end, and nobody really realizes that they're paying it. It's a lot easier to raise the rate of IPT than, say, income tax. Another trend that we've seen, and Mike mentioned, were the increase in tax office activities. I've certainly been dealing with a lot more queries from tax offices, from the German offices, the Italian offices. And also the consortio. The consortio are doing a lot of trend-based analysis at the moment, producing really quite impressive graphs, colourful graphs showing when people pay taxes in one year and how it compares to the current year, and asking for explanations as to why there's these variations. I've also seen an increased focus on reporting requirements. So not only are we calculating paying taxes, but we're having to provide more information, provide more reports. Some examples would be the Italian return, which has changed a number of times. More boxes being introduced into the return. It's, breaking out the premium more and more and more to give better reporting there. And also the Portuguese, in the recent Portuguese state budget proposals, the reporting requirements were put out there as maybe something that they want to look to introduce for the stamp duty. If you know the stamp duty returns in Portugal at the moment, they're some of the easiest to complete, really. I mean, you just tell the authorities how much you want to pay and you pay it. I think they're now sort of saying, well, we want some sort of evidence to back up these amounts that you're paying. We want to see your premiums. We want to see your policies listed out so that we can sort of confirm the amounts that you're actually paying as is correct. Life taxes, or taxes on life insurance premiums, have also been brought into focus following the ECJ case in February this year, which was looking at where the location of risk for tax purposes for life premiums is. Some have called this the caverna of the life insurance premium world. I don't know if I'm going to go quite that far, but essentially it has brought into focus taxes on life insurance, whereas before it was considered that where the policy was taken out was where you taxed it and you forgot about it. This case has said no. We want to know where you've paid that premium from. So, for example, a Dutch policyholder takes out life insurance in Holland. They pay their first few years of insurance premiums from their residence in Holland. They retire and think that it might be nice to move to Belgium. They move to Belgium and take up habitual residence in Belgium. Their treatment of the IPT on their premiums will then have changed. When they were in Holland, they would have fallen under the Dutch IPT regime and subsequently paid no IPT, life being exempt in Holland. They've moved to Belgium and they now have to account for 2% IPT on their premiums. Or rather, the insurer has to ensure that they're accounting for that. It's the insurer's responsibility to be charging it and remitting it. So an insurer now needs to know all the life rates across Europe, because their policyholders could potentially move anywhere in Europe. And they also have to know how to settle them. And they also have to know where their policyholder is at any one time when they're paying the premium. So it's, I think, going to move from maybe a neglected and forgotten area of premium tax to being drawn much more into focus. And the final point I've got there, I suppose, is all of them sort of dovetailing, really. Market focus on compliance. I've seen it with my clients, certainly. Compliance is more and more important. The more time I spend in IPT, the more important people are viewing compliance, getting it right. Not only getting the right rate of tax, but making sure we're paying it at the right time, in the right manner, to the right people. And also the values are becoming less and less important, you know. Before, maybe we would just focus on the big ticket numbers, but right down to the odd €100 here and there are really starting to become important for people. So now we'll have a little look at some of the stuff that we've done to help our clients navigate their way through IPT. Case review 1, conflicting information. I'm sure you've come across this issue. There are a number of sources out there, a number of brokers out there, and you're trying to put a program together and they're all telling you different things. Well, we had one client that was having this particular problem. They had several brokers putting together the programs, both saying contradictory things about the taxes. Fairly niche area of insurance, but the insurer wanted a definitive answer. And in fact, with this case, the real issue for them was not necessarily what rate of tax we should be applying, but where the risk is actually located. So FiscalReps in this instance did a full review of the policy, understood the contractual route, really understood the product to be able to provide a rate table that was bespoke to the client, that fed into their systems as they needed. And in doing that, we consulted with a number of tax authorities and the EU Commission to sort of get their input, tell us how they would interpret the location of risk rules throughout Europe. The next case review, similar to the first, another niche insurer specialising on motor third party or motor fully comp, really exploiting their passporting rights, writing in almost every European country. Motor insurance is a tricky one for IPT. It's maybe one of the more complex ones with the more taxes. I think in Portugal you can be looking up to 7 taxes on a motor insurance contract. France as well, a number of taxes, and identifying the correct rate of tax is quite tricky. But this client was writing high volume of premiums, but low value. So, you know, turning them over. Margins were very important. Very important that the rates were exactly right, because any error would, you know, wipe out any profit straight away. So Again, we understood the policy, we looked at the policy, understood the product, understood the contractual route, and produced a rate table that the client wanted, that the client needed, that would feed into their systems, that they could look up and they could work out what exactly it is they needed to be charging. And in fact, for this client, the rates are so important to them that they require a quarterly update, quarterly refresh of the rates to ensure that everything's up to date. Now, not everything goes right, and sometimes we find that we've got tax liabilities that we haven't settled, and we need to get them sorted. One instance that I've dealt with recently has been non-UK based, EU based, but non-UK owner-managed captive. Had no real tax department to talk of, and certainly no IPT specialisms. And they had a number of filing issues in the UK. Approximately £70,000 undeclared taxes, and then a further 10,000 declared in the wrong period. What did FiscalReps do? Well, we recommended full voluntary disclosure. Go to HMRC, open and honest approach, managed to fully mitigate the penalties in this case with only interest being imposed. But the key thing here, I mean, for the client, the amounts of tax and the penalties weren't the big issue. It was what we did afterwards, which was getting the systems in place going forwards for them, so they understood the timelines, they understood the taxes, so that they could ensure that on their annual cycle they could remain fully compliant. Case review 4, the training challenge. A large UK, or reasonably large UK insurer writing European non-life business had limited working knowledge of IPT, not really focused on it too much, but had a number of different stakeholders in the IPT process, wanting to understand it, wanted to get a grip so they could all fulfill their roles properly. And they identified a training need there. So FiscalReps designed and delivered bespoke training for them at 3 levels, so that those that were doing, the majority of the work, the grunt work, would be on all 3. Maybe those that were just at the sign-off phase would have the basic understanding, and it was delivered on site to the client over a number of days, really tailored towards the needs that they had. As I mentioned earlier, life insurance is starting to come in focus, and indeed we've already started to look at the life taxes. Found that there's very little market information available on life taxes. It's not really something that has been explored very much, so although it says we've started to build the life tax rate table. It's not an easy task. It's certainly something that has been neglected for a long time, and it's on its way, and we've got a good chunk of that sort of ready, up and running. And then we have tax authority sign-off. I mean, for me, this is key, really. This is what everybody wants. It's all good and well saying, well, we found this little bit in the legislation that says that this is exempt or this is taxable. But my experience of IPT legislation is that it's old, it's sparse, not very clear, quite often in another language, and not only another language is legal language, so trying to interpret it and understand it can be an absolute minefield. And really, all we're worried about is what the tax authorities will say. How will the tax authorities treat it? If the tax authorities say one thing, then that's a pretty good thing to go with, I'd say. So we've been meeting with tax authorities, building our relationships with them, presenting our understanding to them, and getting their sign-off to say, yeah, you know what, you've interpreted that correctly, that's exactly how we would do it. That gives us comfort that we're, on the right tracks, but it also gives our clients comfort that they're not going to be stung for any unhidden amounts of unpaid taxes or incorrectly calculated taxes. Also, building this strong relationship with the tax authorities is been very good for us. I mean, we've even got to a stage now with some where we're getting calls from the tax authorities to us to ask for our input, to ask for our view. It's sort of seen as a little tap into the market as to, if we did this, how would they react? How would the market react? Why are the markets so resistant to, I don't know, moving from quarterly filings to monthly filings? These sort of questions we're starting to be asked because we're seen as being trusted by the tax authorities, or at least a number of them. So that's really some of the things that I wanted to share with you, where we're up to, what we're doing, and that's in addition, of course, to the several thousands of tax returns that we get out of the door every month on time. So thank you for your time.